This is Dan Dix here, reporting for Press for Truth, and it is gold's time to shine. It seems that savvy investors have been buying the dip, so to speak, and they're making some pretty big gains. So joining us on the line right now to help us understand the ebb and flows of the metal market is our good friend John Sneisen, author and economic analyst at World Alternative Media. John, thanks for joining us here today. Now, I know this is something that you've been covering, you've been following this for a long time. So can you break it down for us what we've been seeing in the gold and metal markets in general, how this relates to the dollar, and what you've been witnessing over the past couple of weeks?
Well, just to thank you again for having me on, Dan. It's always a pleasure being on your channel. You're doing fantastic work over at Press for Truth. Yeah, when it comes to gold, it's very interesting. It's very manipulated. It's been like that ever since, the peak in 2011 when it was really high. It almost peaked at about $1,800 US for an ounce of gold. And ever since then, it's been a huge effort on a worldwide scale to try to get the fare away from when you see gold going up, that means that fiat is in trouble. So it's just like that kind of trust game that you're seeing, and that's what's been happening, is that the trust level went actually very low in 2011, and then they kind of just tried to manipulate it down in order to get the public back into believing that central banks have any value for the population, which has not, because they manipulate. And I'm going to go into some numbers before I go into gold, actually, to show you how bad the manipulation have been over the last 10 years since we had the 2008 crisis. Because these numbers here, Dan, will be quite baffling to your viewers to listen to. And I'm actually working on a report about the major central banks, and I just wanted to pull up some numbers so you can see kind of how ridiculous this manipulation have been. For example, the Fed, they were in 2008, they were at $800 billion that they held on their balance sheets of I don't really call them assets. They're more of different holdings of bonds and so on. But then suddenly, all the way until now, and even now, they've been selling off a mass amounts of their balance sheet in order to try to, they're calling it, exiting or quantitative tightening. Now they currently lay at about $4.1 trillion on their balance sheet. So that's still substantial. And then you have the same kind of story everywhere, Dan, where you have the ECB. They have had a massive buying. Bank of Japan, same with Bank of England. And if we actually take a look at the percentages from just the last 10 years, you have the Fed laying at 415% increase. So that means that they created all this new money, and then they bought up mortgage-backed securities and other bad assets off of the bank's balance sheets. Then they give fresh money to the banks again for them to then invest in other things. So it's just a huge scheme. And then of course the banks now they're putting a whole bunch of this cash, well, not cash, it's electronic fake debt onto the depository of the central banks, where they have it stored, and making money off of that, of course. So it's a huge scam that's going on there. And then the ECB is up 311%. The Bank of Japan is 413, and actually worst of them all is Bank of England with 560% increase on their balance sheet. And just to show you, I'm just gonna, because people have been saying oh yeah, the Fed is exiting, they're starting to sell off. We're going back to normality, into monetary policy or whatever they like to call it. Well, the Fed has sold off in just 2018. They sold off 6% of their balance sheet, but of course, there's a huge collusion. If you have, excuse me, if you have read the book of Nomi Prince, she's been talking about, it's called Collusion, and it talks about how the central banks is oh yeah, you're not printing a whole bunch of money now. We're going to take over. We're going to do the printing. So also the ECB is up 5%. The Bank of Japan is up 5%, and the Bank of England is up 4%. So the tightening, or the normal, going back to normalcy, as the Powell and everybody else is trying to tell people that they're doing, you're not really seeing that, because you're seeing just a lot bigger increase, because both the ECB and the Bank of Japan have balance sheets that are comparable to the Fed. So when it comes to, I looked at all the central banks, and they actually printed about 3% over the last year in more money that's come onto their balance sheet. So they haven't done any quantitative easing no quantitative tightening on a worldwide scale. They've actually been doing easing. So they've been buying, the ECB has still been buying a whole bunch of junk bonds, in the European Union. That junk bond means that it's just bonds that will never get paid back, most likely, from corporations in Europe that they're trying to prop up in order to save the whole European Union, of course, because that's really coming crashing down. But let's get back to the important thing here about gold. But I thought that this was so important for people to see why gold is so important, and understanding that all this massive money printing by these central banks, that's going to come huge into gold's favor, of course, because gold is the antidote to fiat currencies losing value. So let's go back to the price here, and I was kind of talking about where you see a manipulation of the prices, and it's interesting. Ever since about 2014, you started to see like a level where gold hits about $1,350 in US dollars per ounce, and then it just gets manipulated down. It tries to hit it again, gets manipulated down. It's back up again, almost at that 1350 level again, where it's kind of looking at getting up there. You're hearing a lot of talk about gold everywhere. People are getting into gold. Big investors, hedge funds, and so on are actually talking about, because all this volatility, it's all because of debt. It's not because of the China-US trade deal or any other like mumbo jumbo that they're trying to push out there. It's mostly about all this massive debt that, it's so unsustainable, and it's zombie nations and corporations and banks everywhere that can't even pay just the interest. That's what they pay. If you and me actually pay the interest, well, the bank would be like, hey, it looks like you should just file for bankruptcy and get it over with. But of course, with nations and others, they would just print that money on a large scale, and that's what they've been doing. What's interesting, though, Dan, is what we've seen in a lot of other nations like Canada, Australia, and other places around the world. You're actually seeing pretty close to record highs in gold prices in their currencies. So that shows us that all these other currencies, they're really struggling, like the Canadian dollar and others. So it's not just like this. Looking at just the US dollar price could be a little bit misleading, if you can call it. Looking at the Canadian dollar and the Australian dollar, all like the euro and so on, because what happened is, because of that, everybody's flooding into the US dollar. All these other currencies become weaker, and that's why we were talking about, I think, on our last video about emerging markets and the high inflation in those countries. Well, that has like flooded into the gold price being, now at record levels because those currencies are weaker.
Well, why on earth would the Canadian government be doing the opposite and selling off their gold reserves? I believe the last numbers we're down to are 77 ounces of gold. I mean, that's pocket change when it comes to government gold holdings. What on earth is the Canadian government doing here? And, how do they figure this is going to be beneficial?
Well, I don't understand how they're going to figure out it's beneficial. They're Keynesians. What's interesting is actually me and Josh, we confronted Bill Murno on this very topic. I know that you tried to confront him in Bilderberg as well, but we actually asked him, hey, you sold off all of the rest of the gold, like 3 point whatever. I think it was 3.4 tons. Yeah, it was about 3 tons in 2014. Before they sold it down. No, 1.7, sorry, 1.7 tons to be accurate with the numbers. And then they actually just sold it off. But we asked Bill Murno, it's like, hey, why are you selling off all the gold? It's like, gold doesn't really have any value. He's like, we could just print money. That's basically what he told us. And that's these Keynesians belief that you can actually just print yourself to prosperity. It's a very insane idea. And I'll get back to and tell a little story about the Keynesian on steroids, Japan, in a second. But you were mentioning that, Canada sold off all their gold. Canada used to have, let me just look at, I'm reading through my book here, Canada, the Greatest Economy in the World, to see the exact number, what it was. I believe it was 1,023 tons is what Canada used to have back in the 70s. And that's how much they actually held. And now we got nothing. Think about that implication. If we get a crisis, for example, where countries like Russia and Kazakhstan and and Turkey that have bought substantial amounts of gold are saying like, oh, yeah, screw fiat currency. We're going to back our currency with some form of value. So they're going to go back to a gold standard, for example. Then you're going to have huge issues like countries like Canada and Norway, where I'm from. We sold our gold in 2003, right after the finance minister attended a Bilderberg meeting, interestingly enough. That's I don't know if that's a coincidence. I think people like to call it that, but I think you and me have studied that group enough that we know that that's a very less likely to be a coincidence. And of course, during that time too, there was a huge, like a kind of spike in the gold price, and they tried like several central banks in 2002 to 2004 and 5. They were actually selling off a lot of their gold holdings to push down the gold price and manipulate it down. So it didn't gain the traction, because that when gold gained traction and like the value goes up, if you lose track of that as a Keynesian economist and you can't tell the people that, oh, everything is fine, you are in big trouble. You're going to be in Venezuela trouble. Like they had a huge gain in gold. And of course, the official price versus the black market price is very different. But again, this is what happens when the countries that have gone, I don't know what to even call them. I think they're just basically sellouts. I wrote about that in my book, where I believe they just sold out to the United Nations programs that they implement. You see Justin Trudeau just keeps on talking about UN programs and everything, how great that is. Because what they really want is to merge us into a global society where you have one global currency, the SDR. But I don't think we're going to actually, people think that you're going to use SDRs. No, you're not going to. You're going to actually most likely sit on massively devalued Canadian dollars if you don't hold any gold, and are way smarter than the actual government. That's, of course, my opinion that you should hold gold. But history is telling me that my opinion has a little bit of say to it, because it always happens that gold keeps its value, because you can't print gold. You can mine it, but you can't print gold in mass amounts, unfortunately, Dan.
Well, in terms of the manipulation we're seeing, would you say it's the Federal Reserve's willingness to cut rates which is leading to a bear market for the dollar, or was this forced upon by the Fed so that they could avoid the alternative, which is a stock market bear run?
Well, it's interesting what we're seeing now. There's this talks. You heard Yellen coming out just recently saying that, well, we might actually see even a cut now. And that's insane. Just looking at the rate actually being at 225 to 250, that is insane. Like now, and if you take a look at the interest rate chart, Dan, it's very, very interesting, because you see the interest rate chart over history for the United States. You'll see that every single crisis ever since the peak in when Volcker panicked in the 1980s, you'll see like there's a drop every recession. Of about between 7 to 5% drop every time, to manipulate the market back up again, so a currency becomes cheaper. So you prop up, kind of like people feel that, oh yeah, now I can go out and buy debt again because debt is cheaper, and then it of course slowly goes up again, then it goes down, like every single time, like 2000. 1987 and 2008, of course, this happened. But now, if you take a look at the last like 10 years, it's basically been close to zero, down at 0.25. And that is telling that they kind of hit the end of the rope of their manipulation power, because now they're talking about lowering interest rate at 2.25. Well, if you're going to look at the average, as I said, it dropped between 5 to 7% to actually try to fix the economy and jumpstart it back up again to save themselves from a currency collapse. What I believe we're going to see is then, if they're going to start lowering now, we might actually see a negative interest rate, and we might see a huge kind of market event combined with, like, you're going to have the stock market, the bond market, and debt just starting to collapse in on itself. And then you might have panics where you have, and that brings me back to, I was saying that I was going to talk about Japan. where we kind of can see where we're heading. If you look at Japan, they had a massive deflationary crash ever since the 1990s, where their economy hasn't grown at all, and that's what they need. These Keynesians, they need constant growth, because when you get growth, you get because the interest that you print when you print money, that interest doesn't exist, so you need constantly more and more money, and it's like an ever increasing berg, where you get more and more debt that needs to pay off the interest that doesn't exist. So what's happening in Japan is that they panicked. They bought 86.11% of all the ETFs. They bought stocks. They bought real estate. So they're buying up all the assets. This is interesting because I wrote a article a couple of years ago about the Federal Reserve will own everything, then nothing. And that's what I believe the Fed will do next. Will kind of follow suit with the Bank of Japan, starting to print mass amounts of money, and then just buying up all the assets to try to prop up the stock market again and save their debt collapse, buy all the bonds, maybe even buy tons of more mortgage-backed securities. They have auto-backed securities. They got collateralized loan obligations, which is corporate debt. So they got all of these derivatives that they have to buy in order to save the economy, most likely. And then they might just come in and ask to buy people's houses. Who knows how crazy they're going to be? But in Ben Bernanke's 2002 speech, he was saying that, well, we might look at like expanding our asset buying programs. And he said the power of inflation will always stop deflation. So they're willing to, what he's saying is they're willing to print as much currency as possible during a crisis to save the economy. And that's why, coming back to gold again, why it's going to be so important to protect your wealth, which gold and silver is, I never look at it as an investment, Dan. I actually look at it as a insurance plan. People have their life insurance, they have their house insurance, if their house burns, and so on. And that's what gold and silver is. It's actually a insurance policy on your wealth, because gold and silver won't lose their value that much. Like if they start to just print themselves into oblivion, you still will keep the purchasing power of that gold and silver, most likely. And actually, it might just surpass by far its actual real purchasing power. It might get substantially overvalued if you get like kind of a currency reset or something down the line. And that's when, people can go out and buy, for example, with the super overvalued gold and silver, they could go into other assets and actually making a lot of money. I was talking to my friend from Yugoslavia that I work with. Well, he's from Croatia now, but during the Yugoslavian crisis, he was talking about how important it was to have like food, water, and shelter. That was the number one thing in hyperinflation, and that's what's very important for any hyperinflation that you study throughout history. But then he said there were some people that had gold and silver, and he said those people at the end of it, they actually bought up and had a substantial amount of assets at the other side of the collapse and cycle, because gold and silver is never going to go up to infinity, of course, and be super valuable, and you're just going to use that. Most likely, it's just going to come down again to normalcy. But what you can do is you can actually use that super overvaluation to then, enrich yourself a little bit, so you could actually be ahead instead of way behind and actually into bankruptcy and losing most of your money. That people that believe, these pensions, everything that's valued in fiat could potentially collapse completely in on itself, or it will most likely, be worth maybe 25 cents on the dollar or something like that, when actually reality hits into people, when we see what this whole Ponzi scheme that printing money through a fractional reserve banking and Keynesian deficit spending system is, that.
Well, on that note, are gold stocks and gold mining company, stocks still a good thing to invest in, or are we at the point now where we should just be getting our hands on tangible assets?
Well, you can play that, of course, with not with leverage, but you can, if you have extra money that you don't have in physical gold and silver, of course, you can go into the stock market and sit on those stocks. It's highly risky, of course, but you can make so much more money in that. So there's a potential. That's, of course, my opinion. By looking at other like 2000 and 2008, what happened then, gold stocks just went through the roof in value because that people were flooding in the stock market. It's like, hey, where can we find any safety net in the stock market? And that was, of course, in the mining stocks and some commodity stocks that actually because commodities are real things, like all the things around us, bricks, mortar, houses, cars, whatever that is, that actually has value. It's not the paper that, when you think that your house or your car is going up in value, it means that your currency is losing value most likely. So that's a huge deception that people have been taught, that, oh yeah, your house is going up in value. Now you could just go out and take out more money on your house, use it as an ATM. That's a huge flawed thinking that we've been taught by the banks and everybody to prop up and continue to get that debt-based system to thrive in order to not make it stop, because the worst enemy of any Keynesian system is deflation, because when you have deflation, debt becomes very expensive and unsustainable, and you will have a collapse or a mass printing into a hyperinflation. But again, like playing stocks is, of course, another way you could gain, like have an extra gain if you actually have the money. If you don't have the money, I wouldn't say, like, I would rather sit on the physical gold and silver, like having that in my safe belongings and holdings, rather than, jumping into the stock market without having that backing in the first place, of course, because that's a huge risk. But let's just finalize this and talk about what's currently happening, because there's some big things happening in the among the central banks, talking about the big central banks in the world, and the numbers have come in from 2018 from central bank accumulation. From 2017, there was an accumulation of 374.8 tons. And then now in 2018, there was 651.5 tons bought. And that's 74% year-over-year gain. So that just tells you that somebody knows that something is going on. And there's been actually since, let's look at the stats here. I got them below here. Ever since 2010, there had been a surplus in buying gold. And that hasn't happened since the 1987 Black Monday, like after Black Monday in 1987. So it's a long time since then, and of course this buying has been going on ever since 2010, and it's been over usually about like between 300 to 500 tons, and now it's a record year. Actually, it's a record year since 2008 of gold buying. So that just shows us that somebody knows that something is going on. And also, there's one more last thing that I'm going to mention here, and that is what's called the gold-silver ratio. Interestingly enough, this ratio, which is basically you just take the gold price divided by the silver price, and then how many units of silver does 1 unit of gold buy you? And actually, that ratio has been predicting crises back till 2000 that I have the numbers for here, and you saw in around the 2000 crisis, when I said they were starting to sell off gold, the central banks, the ratio was at 82.11, and then it jumped, goes down, this ratio down to all the way down to 43.80 was the record, was the low in 2006. That's when you can even play this ratio and buy gold, buy silver when the ratio is high, and then buy gold when the ratio is low with the silver. Mike Maloney does that, by the way. But then again, it started to predict something happening in 2000, right in 2008, right at the peak of the bubble, when it really started to collapse, the bubble. It was all the way up at 84.38, the ratio. Then it dropped down all the way at the record low when the prices were at the highest. It was in 2011, and that was 32.01, the ratio. So you could see how much, you can make a substantial amount if you bought silver at the peak, and then you can actually buy in at the bottom and then buy the gold. And then now, interestingly enough, it actually peaked up at 85.56. And then the current ratio, I did the calculations, is 83.03. So it seems like it's moving down now, Dan. We'll see where it's going to take us. I think it's just manipulation. They're just trying to keep this this Titanic afloat after it hit the iceberg in 2008. And they're just desperately trying to print more money here and there, just manipulate, have the share buybacks that the corporations does. There's no more real economy anymore. I was mentioning briefly zombie nations, zombie corporations, and so on. That's what happened. We financialized the economy. It happened, interestingly enough, another period was the French Revolution. You had the financialization, the Mississippi bubble, and all those things that happened during that time, that financialization of the economy. And then you ended up with, because at one point, like where we're now, there's no point for anybody to actually go out and do anything productive, innovate, or create anything as a business. It's more productive for them to actually just take a loan, buy back their own stocks, manipulate their stock price up. And that's where we're at, where you can just make money with money, and it doesn't matter what you provide as a good or a service to the population as a corporation anymore. We could just play with money now, and that's what we need to do. And that's when the death of the economy will surely happen, shortly after, unfortunately.
All right. Well, as always, you said such a great wealth of information on this, and as you said, we're in the we're seeing all the telltale signs right now, and those who see what's coming are preparing themselves. And maybe we ought to be doing the same thing. So once again, John, thank you so much for taking the time to help us break this down, understand what's going on in the markets. And I encourage people to check John out at World Alternative Media. Links will be located in the description below. Once again, man, thanks for talking to us today.
Always a pleasure, Dan.
We all want truth. The truth will set you free.